Well, we've now heard from two of the leading central bankers in the world who both make the same point. The job's not done. How much more do you think they have to do?
Well, I think it is too soon to tell. And I think what you're hearing from these two leaders of the central bank community is until you see their target in sight, you can't declare victory on this. So whether that takes more, whether it takes more patience, I think we're going to have to wait and see.
You haven't been there for a couple of months, but you've spent years inside. So I want to ask you, you say when inflation is on a path to 2%. Kind of what does that mean? Do we need to get below 3% before you even start considering it? What would the target be?
So the way I think about it, Mike, is that we've seen a couple of months of data that would suggest 2 might be coming along. But I think seeing something more consistent, I think what central banks are worried about, what I'd be worried about, is taking that as a consistent signal. And so I'd want to see some more data. And it might mean I'd be patient in September while I waited to see what the next data releases look like.
Could you keep that patience if inflation was either stagnant or moving very slowly, or would you feel the need to go higher? You were more hawkish before you left.
Yeah, I think what you have to be really attentive to is determining how long it will take you to get to 2%. So we're going to see this committee put out a new set of forecasts at their next meeting. And I think looking to see where they peg their expectation around inflation by 2025 is going to be an important signal of the patience where they see the Fed funds rate going. But I think you're going to have to just be very flexible. And I think you've heard that today.
Well, when you talk to them, it's clear they're going to have to raise their unemployment or change their unemployment forecast because it's just not doing what they thought it would do. And what you, when you were there, thought it would do. Do you have a theory as to why?
Well, I keep going back to the situation, the shock that hit our economy. This was an extraordinary shock, and it was met with an extraordinary response. So when you think about the trillions of dollars that the government transferred from its balance sheet to households, to businesses, and you think about the Fed's very aggressive monetary policy, I think that combination with those imbalances made it difficult to read any signal. So now you're beginning to see both the supply side easing up, monetary policy reversing course, but there's probably still some stimulus in the economy that we see the effects of. So it's made it more resilient. The labor market has stayed tight.
So you are a proponent of the long and variable lags that still have to hit the economy?
No, I think as I've looked back over time, and again, this is a different kind of shock. We're working through a different kind of imbalance here. But in the past, monetary policy has taken some time, up to 18 months, 2 years, to see its full effects. And that's why I'm a little hesitant to say soft landing is here, that this will be the case over the next year or so. I think you just have to wait and see.
Chairman Powell was at pains to say that the economy is stronger than anticipated.
Right.
Does that give you inflation heebie-jeebies, the worry that we could see, again, a supply-demand imbalance?
I think you have to keep that very much in mind. And I think one of the things I heard today was thinking about the scenarios, your assumptions that underlie that forecast. So if there are lags and they're going to work their way through, you should continue to see some of that softness show up, either in the labor market, in output in the economy. If that doesn't materialize, then that tells you something else is at work here, and that it may mean central banks have to take more steps to tighten policy.
You came up through the Fed system as a bank examiner, and banks have been your focus during your term in office. Banking system was big in the news earlier this year. Do you think those really were isolated situations?
Well, I think they were probably the worst case scenarios. Those generally hit first. But I think there are many banks that are going to feel the pain of having a balance sheet, having a bond portfolio that is feeling the effects of these rates. And the question is whether between their customer base, whether their margins are set in a way that they can work through that over the long term. I think most banks will be able to do that, but they're going to be very cautious too, and you see that in their lending standards right now. Banks
are very unhappy with Vice Chairman Barr's proposals to tighten capital standards and also to impose some regulations that will add to costs. What do you think of that? Do the banks have a case, or is Vice Chairman Barr being prudent?
Well, I've always been an advocate for high levels of capital in the banking system. It is so important that banks can survive under many conditions. And we learned a lesson in 2008, I think, which is assuming that the banks were capitalized, they weren't. And the risk-weighted regime was not adequate then. So whether the final game that will be proposed here is going to be adequate, I don't know. But I think you have to keep attention on keeping strong capital in the banks right now.
Well, I have to ask you, after your career at the Fed, many years at the Fed before you even became president of this bank, but you got to wait, I guess, 5 years after retirement before you can be elected to the Hall of Fame. But what's your favorite memory?
No nominations yet.
What's your favorite memory of the Jackson Hole symposiums?
Oh, they've all had their own characteristics, I think, that have made them great. Two things I would say. One is when you walk up to the lobby and you look out at these mountains, you're reminded of the natural beauty that's accompanied this conference. And the other thing is this has become a sort of a reunion here, and that is despite whatever economic situation has been handed to central bankers, to academia, it is a great chance to get together and really talk to one another about the issues that we think about.
Before we let you go, I have to ask you about your current job, not full-time, but you are doing something completely different from central banking.
A little bit. You may be referring to my soccer work. Yeah, the Kansas City area has been awarded a host city for the World Cup in 2026. And so I've joined with a number of Kansas Cityans there to make sure that the city is ready to be on the world stage for that, and I'm enjoying that.